Hey guys, thank you for watching again. For hearing. They could say me watching, but yes, we're back here in the Wall Street Journal. This back goes back to my thesis about people having money, right? You know that if you hear my last video about the stimulus plan and what's going on with that, and then I think they did people having more money with the credit of the household and people having more money with stimulus, yada yada, right? So this came out today. This came out actually February 26th. That's today. Yesterday, sorry, at 5 o'clock. So today is 27th. Sorry. So it reads the boost to household income primes U.S. Economy for strong growth. Personal income grew 10% in January, the second largest rise, and spending to rose for 2.4. So basically, they're spending more and they have more, right? So why do we care about what people have? Why? Ask yourself, why do we care? And this is the reason why. Consumers' consumption expenditures include all goods and services, right? That the American consumers buy and pay for, including household health care. That accounts for 70% of the whole pie, of the whole GDP of that it accounts for. So personal things that we do counts for 70% of the whole economy, right? So that's why it matters so much what we do, right? We as consumers, as I as consumers, as you as consumers, this is why it matters. So at the end of the day, let's read a little bit about this. American receipts from wages and investment programs rose 10% in January and previous month. The Commerce Department that said Friday increased the second largest in record, eclipsed only by April's gain. Federal government sent an initial round of pandemic relief payments. Income has risen 13% since February 2020, the month before the pandemic shut down the largest segment of the economy. Look at here. So we see the savings rate from 2007 all the way to from 2020. See, it went a little bit down on October 2020, and then went all the way back out. So people are again saving. So basically, and let's look at the personal income and consumer spending. So we can see there's more savings and spending, and on top of that, well, I made a video and they're going to give more money in the stimulus with house purchases of $15 credits. So there's more money out there for the purpose for people to actually take advantage of and go spend. The whole idea here is spend money. Spend correctly, right? This is for my opinion. This is for entertainment purposes only. This is my view. But at the end of the day, that goes back to my thesis that the house market is going to continue going up for the same reason, because people have money. They have money to spend and they have savings. And if people will like to put the first thing they think is where do I want to spend my money on? Cars or on cars? If not cars, a house. For sure it's going to be a house, because people are, like I said, the most audience that are out there in this case of house purchases is the millennials. So most of those people are buying houses, and with this incentive and this indicator of savings is a positive one that it's going to move forward. And that's why I think, like for example, RDFN I've invested in it's going to do well over time, and it's 3 to 4 months. So that's why this is for me a long hold for the same purposes and my indicators, and the reason why are just coming out. There's other stocks out there, Zillow, other real estate stocks, and other consumer goods and services that are good for you this week. Like a lot of luxury things have gone up. Like for example, like travel, airlines, all those stocks have done well because of this right here. It states clearly that the house income is increasing, meaning that they can account for 70% of the consumption of the GDP, meaning that what they do matters in luxury, airplanes, vacations, house purchases. All that matters because they have what? Money, right? So at the end of the day, this is why I think that this is a big feeling, like putting gas to the fire. It's going to make it more fire, right? So let's read a little bit about this, okay? Consumer spending is the biggest factor behind the growth and soared in summer. Grew modestly in early fall, and when it fell 2 months in 2020. The decline at the end last year occurred in states and cities ordered business to shut and scale back again, as virus affected research restrict consumers' ability to spend. Also affect earlier stimulus passed outside of pandemic faded. For example, like Americans has cut back on spending during the pandemic, mostly not to go out and to eat or travel, saving $300 to $400 a month. This is what they state. People are going to travel. They're going to go back to restaurants and bars, and they're going to go to the gym. All things basically that we were not able to do before the pandemic. This is where we're really going to see the burst in spending. For example, airplanes, vacations, travels, like with the vacation locations, all these luxury things, luxury items are gonna go up. And all most of the necessity state consumer staples, like like grocery stores, they're gonna do well. They have done well, but they're not gonna be looking down the line. Those are gonna give you the best returns. So meaning that also like real estate, luxury, all these, it's gonna be in the same boat because people are gonna continue spending in those areas mostly. And this is how we see it in this week. It was a reinverting assets to those asset locations. So meaning that, to my thesis, that we're still in a good positive note. We don't see, yes, the yield went up. That's concerning, but it's not to where we should be very concerned of have sincerely. Oh, we're gonna have like a depression. No, it's just a correction, you could say, that we could take advantage of certain stocks that I see. Like for example, for me, RDFN, I see all the stocks that we could take advantage of. That you could place your money and you could take advantage of because of the selling that has occurred, and it's very steep, 20-30%. Other stocks like Tesla, a lot of stocks out there that are already in their low supports that if you hold them for short term, you can make some good profit. So just look at what you feel comfortable and what you want to see. But this goes back to my thesis that we're heading the right direction still. If you do have any comments, you can leave on my Twitter page. On my Twitter page is right here, is ACGLA, or you can like my channel or dislike the video or like the video. Thank you.